So, you've heard the term investing and you've decided you want to invest. But what does that even mean? Where do you even start? If you've been asking these questions, then you're at the right place. My name is Ognian Stanoev and this is the first video in my complete Investing for Beginners guide. In this video series, we will go from confusion to clarity. As a person who has achieved financial freedom through investing, my goal is to get you from zero knowledge to having a good overview of what investing is, how to invest, what different types of assets there are, and how to decide which ones to choose, common mistakes, and more. By the end, you'll be able to make an informed decision about your financial future and will be crystal clear on what your next steps should be. So, let's begin with the basic question. What is investing? For the purpose of this series, we'll only talk about financial investments. I know a lot of people say they invest their time into something or invest it in a vacation or a laptop, etc. This is not what we will be talking about. We will only talk about investing money here. Okay, so first you need to know that there isn't an exact definition, but generally investing means putting your money into something and expecting a return from it, while at the same time having at least a little bit of risk. Two important terms here: return and risk. Return is basically what you get from your investment. If you invest $100 and you get 10 back, you got $10 from your initial $100 investment, or 10%. Every single person who invests expects something in return, otherwise there would be no incentive for them to invest in the first place. Okay, what about risk? Risk is the possibility of something going not the way you want it to. From that stranger in the bar not giving you their phone number, all the way to a car crash, risk is an inevitable reality of our life. This is an important lesson you need to remember. There is no removing risk, only managing it. The same applies to investing. When you're putting your money at risk to get return on it, you are assuming there is some risk. Imagine it like this. In order for you to make anything you want to happen, a movement needs to be involved. Either you need to move or something else in the world needs to move so that a result can be produced. Same goes for your money. When you're putting your money to work, something moves in the world and that movement is what brings you results. But just like with getting up from the sofa to get that cup of water, there is a chance you might slip and fall on the floor. That doesn't mean you should not drink water. It just means that you should be looking at your feet when you're walking. This is also the case with investing. A lot of people are paralyzed when they hear the word risk, when they don't realize it's the same with driving a car or getting outside. If you want something to happen, you need to do something. If you want a return on your money, you need to invest your money and let it move, so to speak. With all that said, generally what investors do is buy assets like stocks, cryptocurrency, gold, or real estate, all of which we'll talk about later in the series. So logically, the next question we need to answer is, what is an asset? To put it in layman terms, an asset is anything that can be useful. For example, if you have a piece of wood, it can either be burned to generate heat or carved to create a useful tool. In the world of finance, an asset is anything of economic value that can be expected to provide an economic benefit. So, when investors buy assets, they hold them for the long term, expecting to either generate cash or sell at a much higher price later. If investors are looking to purchase an asset that generates cash, like rent from a house or dividend from a company, then that is the purest form of investing, where you buy something that generates value for society and you receive a reward for that. It is a pretty simple concept that everyone can understand. On the other hand, if investors are looking to purchase an asset and then sell it at a later date for a profit, the line with trading becomes a bit blurred, but this is still considered investing. In that case, the investor is looking for something that is undervalued according to them, buy it, hold it, and then, when they think it is overvalued, sell it and make a profit. Not complicated at all, right? Yeah, well, at least until you try to do it, but more on that later. So, putting your money to work in an asset, expecting it to generate return while carrying a certain amount of risk. Now that you know what investing is, let's answer the most important question. Why the hell should you even invest? And we'll do that in our next video from our Investing for Beginners guide. So click on the video on your screen and I'll see you there.